Hello, everyone. Hope you enjoyed a nice and wonderful weekend. And I just want to give you a recap on how the market looked and get some update about the Omicron virus. All major indices were pulled back from previous Friday, last Monday, and Tuesday. You can see a screen on the 5-day on Dow Jones Industrial Average. It's down 1.65%, 594 points. And the Nasdaq down 0.07%, which is much slighter than Dow Jones, 10.72 points. And also S&P 500 down by 1.9%, 4620.64. So the market, you can see all three indices in the Monday and Tuesday were kind of in the down trend. Pull it back in the previous week, and it was really waiting for the Fed meeting to talk about the fiscal policy. So given the investor worry about change of Fed policy Wednesday, and then you flip the last hour before the bell, and despite the immediate aftermath of Federal Reserve meeting Wednesday, when policymakers are accelerating the pace of bond purchase tapering and signaled 3 rate hikes in 2022. The market went down before Fed meeting, but then it really actually went back up. Data published Wednesday also show retail sales rose 0.3% lower than expected, 0.8% per. The unemployment is expected 4 to 3.5% in 2022, below the normal estimate 4%. The virus is on the rise, with 7-day average of over 120,000 new cases every day. So you were surprised again then with the Wednesday uptick in the last hour. Thursday's the Bank of England also raised interest rate for the first time since the pandemic struck, setting aside the threat to the UK economy. It was a tough decision. The barrier hike is response to the danger posed by surging price gains, which inflation, just like in US, with the report showing inflation jumped to 5.1% in November. Then so because of the stock kind of sold off, and while a separate ECB stimulus effort ramp up, the net effect is fewer asset purchase. Adobe System Incorporated, symbol ADBE, tumbled 9% Thursday after the company forecast for 2022 revenue came short expectation. The design software maker expected revenue to hit $17.9 billion in the ongoing financial year, up over 13% year-on-year, but sharply slower than 20% rate. Winnebago Industry, symbol WGO, seen reported first quarter revenue of $1.04 billion and profit per share of $2.36. Tesla stock slipped as CEO Elon Musk offloaded another $884.1 million worth of shares in the EV maker. Since early January, his sales now total about $14 billion. And then even Thursday down, Friday was even lower, though the Nasdaq erased most losses in choppy section that closed a volatile week. Dow Jones down 500 points given the gain earlier of the week. Financial stocks were bigger decline along with energy sector. Apple, Google, Microsoft continue to pull back after Apple hit a record high earlier of the week. Rivian stock sank after revealing late Thursday the production of electric trucks this year will fall short of its target. AMC stock rose as much as 22% after theater chain said that the latest Spider-Man movie set box office record for December release. Tesla stock slips as CEO Elon Musk offload. Johnson & Johnson fell 2.8% after advisory panel for Center for Disease Control and Prevention voted to recommend vaccine from Pfizer and Moderna over the Johnson & Johnson vaccine. GM General Motors fell more than 5% after having executive report repeatedly left the company. Western Texas Intermediate crude oil settled 2.1% lower at $71.86 per barrel on Friday and posted a week by a loss of 1.1%. Brent oil's international benchmark, slipped 2.3% to $32.32 per barrel. Gold rose about 0.1% to $17.9950 per ounce, while Bitcoin dropped 2.6% to $46,000. The 10-year Treasury rate dipped 1.5 basis points to 1.407%. So just give you a quick update on new variant Omicron. All vaccines still seem to be providing significant degree of protection against serious illness from Omicron, which is the most crucial goal. But only the Pfizer and Moderna shots, when enforced by booster, appear to have initial success of stopping infection, and those vaccines are available in most of the world. The other shot, including those from AstraZeneca, Johnson & Johnson, vaccine manufactured in China and Russia, do little to nothing to stop the spread of Omicron, early research shows. And because most countries have built their incubation program around this vaccine, the gap would have a profound impact across the pandemic. So what's next? The stock market right now, the futures, it was really not doing well and so off. Dow is down about 800 points, and Nasdaq is down 261 points on S&P 47.5. So it was a big shift from earlier before the Asian market opened. Is showing that the weaknesses of the market and kind of continue to slip. So hopefully again, but this is not an indication of when the market actually look back. So just to be aware of that. And yeah, some JP Morgan strategists point out volatility targeting and risk parity funds are adding exposure with a strong value growth rotation also underway. Overall, the situation from a technical fundamental perspective doesn't resemble the massive stock market growth seen in the fourth quarter 2018. So there's aggressive shorting, like hope of decline in retail equity position and cryptocurrency holding, while in fact both of these market retail investors shown resilience in the past weeks. So the short are looked to get squeezed. Large short position widely needed to be closed before January when this JP Morgan strategists expect a rally in small cap value and cyclical stock. We continue to see upside in equity and better than expected earnings growth. China emerging market backdrop improving, normalizing consumer spending habit, he explained. Last Friday, it was probably a good chance of buying at the dip, and possibly Monday now with the futures was down so much as well. Again, buying at dip is still the favorite hold right now, or action to do. So if you're going to buy for short term, for those listening to my video earlier, I would say picking FAAMNG, Facebook, Amazon, Apple, Microsoft, Netflix, Google, and Tesla. Cruise and airline stock may or may not go up before end of year because of dependent on development of Omicron, but in the long run, I still favor on these stocks because when the economy reopen, which have no restriction of travel, this stock definitely will be picked up. So hopefully, this video help you give you some insights about the development of Omicron, how the stock market to look like at the moment. It looks like still more slip, but hopefully the cyclical effect will kick it in rather than seeing a 2018 decline. Normally the first quarter, the earnings will come again, pick it up, and show how resilient the U.S. market as well. So hopefully, we will continue to see the uptick after, showing it down, and we'll have the volume pick up. Have a nice and wonderful week.